filling up those last final remaining spots for Bakara. And don't forget, shortly after, we will have an academy in October, give or take, once we get that final down. They give me the information on that. We will start talking about that one. But we're looking forward to having you out there. Got a couple new guys signed up. And man, I tell you what, it's been a lot of fun just to be a carnivore lately and watching Dutch and Z. We talked about it on Thursday about just watching the two of them mold together, and I think they're going to talk about it more today. But if you guys had any questions on this or different options available for upgrades, or even just how to use your services better, I'm always happy to get on a call with you. That's my job here. Make sure that you are happy, and we can keep you carnivores for life, so you can stay a part of Z and Dutch, making as much as we can. So Z, take it away, brother.
Welcome, everybody. Hey, if you're new, I would say it is definitely worth reaching out to Godfather and Jen at customer support and letting them give you the lay of the land.
I'm happy to do it. Yeah, don't think that you gotta buy something always. Look,
if you're here and you're a subscriber, reach out and we'll walk you through the platform. Hopefully, you get on these calls weekly and you kind of start picking up from these calls. But we appreciate you being here. This is our 77th call that we've recorded. June 22nd is here. This month is flying by. We are in the heart of summer. Remember, we're not a registered investment advisor. Past performance, no guaranteed future results. All carnivore trading portfolios are hypothetical. Nothing on this call should be construed as individual investment advice. And always remember to do your own damn research. Special thanks to everybody that we beg, borrow, and steal from. Got a lot of the usual suspects here today. If you've got too many indicators on your charts, you're not adding clarity.
You got my charts.
Okay. I know a lot of you guys come to the academy and everybody wants to know what the secret combination of indicators is. It does not exist. But you got to pick a few that you like, you can use. Don't go overboard. Otherwise, you end up with this. Okay. I thought that was good. All right. So we had a core message delivered by Mr. Warsh at his first Fed meeting. 2% or bust. Warsh made it unusually explicit that after roughly 5 years of missing on inflation, the Fed is now singularly focused on delivering price stability at 2%. And he will not reconsider that target until it is actually achieved. He framed the recent period as a failure that must be rectified, telling reporters that the Fed will get inflation back to 2% and that only then will households feel like the worst of the inflation shock is behind them. That language is materially more hardline than the typical "we remain strongly committed" boilerplate, and is the clearest single takeaway for markets about this meeting. You got a nasty reaction from that. My response to Mr. Warsh is good luck with that. I am cheering for you. So here is the one-day percentage change in the S&P 500 on new chairman's first day. And Mr. Warsh kind of got the welcome that most get, which is a down day. Greenspan, who actually just died, also had a bad first day, so maybe that's a sign of good things to come, as the maestro presided over one of the great bull markets of my lifetime, at least. So maybe Mr. Warsh will do something similar, but nonetheless, I wouldn't read too much into it yet. Not yet.
Hey, first, what did you think of his overall, though, the tone? Did you love it?
Look, I thought it was. I thought he said what I thought he would say, particularly the parts about the Fed kind of missing the mark and him believing that a lot of the data sources that they are leaning on to make these decisions are
old numbers.
He doesn't believe that the
I loved what he said about
value.
I love what he said about forward guidance. They kept trying to. I mean, he just took that off the table.
He's been a big critic of the dot plot, and he also, I think, has been a critic of there being too many voices at the Fed talking
Okay,
simultaneously.
okay. All this, all the stuff that we've been shouting about for 5 years.
Yeah,
Okay.
yeah.
Every Fed governor comes out with a something to say, causing volatility and cross currents that they shouldn't do. Okay, so he's got a task force on that. He's going to shut that crap down. This whole dot plot thing is lame. I don't know who came up with dot plot.
That was so great that he said that, Dutch. We watched it
Gotta be
live, right? We watched it, and you said something real good on Direct Action. We were watching it. You said this guy can answer questions because always questions. We have a guy that's not afraid to go after questions, and you said that on Thursday.
The big thing is, look, there ought to be a more singular voice of the Fed instead of 17 guys having press releases causing all this volatility. So I'm glad he's focusing on that. He's going to put the hammer down, and this whole forward guidance crap and the dot plot. I mean, who come up? That's like kindergarten stuff. Come on.
The messaging, I think, outside of maybe his perceived hawkish tone around the 2% number was pretty well received by most people. That'd be my general commentary.
Well, you know when he said, I mean, these reporters were like, "Oh no, we're not going to get forward guidance. What are we supposed to write about now? Oh no!" I loved it. It's like it was perfect. Okay.
He said you're going to make it up anyway, so why do you even need me?
Oh well, and then the big part about data. Okay. The use of data. He actually said it. The rest of the world is using real-time data. What the hell are we doing?
The survey method of collection has been woefully inaccurate for the last few years, and the number of respondents has gone down material. There's been a lot of great criticism of that survey process and a lot of some of these older collective methods, but I think his real challenge, guys, is this, and I wrote about this morning. This was actually in the pre-market wrap this morning. Near term is this tug of war between a firm dollar and higher yields, right? And a cleaner inflation narrative, maybe thanks to the lower oil prices. Okay, so we got this tug of war between this dollar that's not going down and higher real yields versus maybe oil's coming down. So we get an agreement one way or the other, whether you like the terms of it or not, probably just because of where oil is in storage, quite frankly. And so now you've got this sort of hawkish tone from the Fed last week. Okay, so now this week we get the PCE, which is the Fed's preferred inflation data point. So I think now the market's going to be super sensitive to anything this PCE data point. Okay. The other big thing that we got this week is Micron's earnings, and I'll talk about that a little bit later. But those are kind of your catalysts short term, and you kind of got a market that's you can see the tug of war, and really, as we've told you on these calls, the reason why it's a tug of war is because the primary catalyst going forward would be lower inflation and lower bond yields. We've got the accelerating corporate earnings growth. Hopefully, we'll get more confirmation of that from Micron, later on in the week. But we need the cooling inflation to give the Fed the room not to raise or to eventually cut. And you're not going to get that if you don't get, oil to come down, which it is. So you kind of need a series of events here. You need lower oil to ease up on inflation, and then get bond yields to ease up, and then that kind of creates the tailwind, right? That's what you need. You need another tailwind to kind of keep pushing equity prices higher. I am beginning to think that maybe there is hope that yields have peaked and that we are going to at least stay within this range that we've been describing to you on these calls now for months. We're right here where we've been in the 10-year yield for quite some time. I think this morning right back at 4.49. Yeah, so right at 4.5. You can see we backed off that 4.68 was the peak a few weeks ago. But zoom out. There's your 5-year chart. Here's your 10-year yield. We need this to either be stable or come down further. Okay. I think that the long bond eventually becomes a buy. You're down 60% from peak. So, what you need here in the long bond is this, right? So I'm really keen on us not going higher in yields from here. I think that'd be bad. Because I think that would signal the market is becoming concerned about inflation going forward. Whereas right now, I think the bond market's actually signaling, no, we're okay. We're going to be okay. Oil's coming down. Inflation's coming down. And this is I go back to this Goldman forecast at 2027 Q2. They've got core PCE at 2%. Okay. So that's kind of what the 10 year's telling you it wants. All right. Now, how does the Fed come into this? How are expectations? Here's the dot plot shifted up. Okay. The median projection now has the funds rate ending 2026 around 3.8, 2027 around 3.6, and 2028 around 3.4. So you got this distribution that was skewed hawkish. Only one participant was still penciling in a cut for this year. The majority seeing 1 to 2 hikes from here. All right. Fed watch and futures have followed suit. The market now assigns higher odds to no move at the very next meeting, but it now prices better than even a cumulative odds of at least 125 basis point hike by year end. So we got a non-trivial probability of a second hike in 2027, and then no essential credible cuts before late 2027. At least that's what the market's pricing in right now. Okay. So in other words, we went from one cut and done to one hike and lengthy plateau. All right. So that's probably a little more restrictive than, I would have wanted as a child of the Greenspan era. But as we've shown you time and time again, inflationary period is not necessarily bad for stocks unless the Fed gets really hawkish in a hurry. So the main thing is they don't rush into raising rates. I don't think they're going to raise rates at all. But we shall see. Okay. So we've got this great 9-week streak that was ended, right? But here again, as we've shown you time and time again, when you have these great runs, they typically look pretty good, a year out. And we've got, even good looks 4 weeks out. So I'm not of the belief that this bull run is over, even really in the short to intermediate term. I am thinking we are entering a very seasonably poor period of the year. So I'm a little cautious about that. We're also entering a no earnings season lull. So we've got maybe some reason to bounce around where we're at right now for a while. But I think, history is signaling when you have these big 9-week streaks that a year from now, stock prices will be materially higher. It was one of the largest 9-week gains from a percentage perspective ever. It ranked 16th. And you can see, the other top 20 moves. It's a sign of a bull market. Okay. It's not the sign of the top. So, I remain optimistic longer term about, this bull. And guys, we've been early here on the last few calls. And even when I talk about it, I think the last 3 or 4 calls, I felt like I was getting away from our core competency, which is stock picking. But I've been talking to you a lot about this idea of mythos and artificial intelligence being a weapon. And, now I think that narrative has been completely vindicated, and even more so over the weekend. We had shown you and talked about this, becoming a commercial race or shifting from a commercial race to a national defense imperative. And I think you're watching it happen in real time. So over the weekend, it was announced, or it was said on June 11th, Mark Warner, the vice chair of the Senate Intelligence Committee, said that General Joshua Rudd, who leads the National Security Agency, so that's the NSA for those that are not familiar, and the Pentagon Cyber Command had told him that Mythos broke into almost all of our classified systems, not in weeks, but in hours. Okay. So advanced AI differs from encryption in another respect too, whereas cryptography eventually became widely available abroad. America today enjoys a clear lead in AI. China, hobbled by American chip controls, is probably about a year behind. That advantage could become unassailable if Anthropic or other American labs crack recursive self-improvement. This is key, right? I'm going to make sure you guys leave this call knowing what this means. And if you don't follow it, go do some research after you get off the call. This is when a model basically can write a better version of itself. Okay, so, and that's about where Mythos is. It's now writing a better version of itself. So it's now self-improving. Okay. I know this sounds like some Skynet Terminator.
Yeah, I think it was the direct line in Skynet, brother.
Okay. So this is where we're at with Mythos. And you know, this was this weekend. So this isn't like something that, you know, has really, I think, hit the mainstream consciousness at any level. And now supposedly Anthropic has a better, more powerful model than Mythos, which has already been banned. And won't be listed, you know, it will not be given to the general public. I think Amazon has now sort of, you know, when we said this on the last call, it's kind of exposed that the enterprise level, or the enterprise stack, if you will, that the whole world runs on is totally vulnerable to this technology. So you've got commercial risks, and you've got government security risks now at play because of, you know, this model. And I think the idea that this becomes a government-backed super cycle becomes more real each time we have these calls. Okay, and thus far it has been private capital that funded the build out, but now it's going to shift to some sort of government subsidized process where they take stakes. You kind of see it from both sides, actually, politically. You got Bernie out there saying, hey, you know what, we got to create some kind of tax to, you know, redistribute the wealth on all these AI companies. There was a big debate between Ro Khanna and David Freeberg on X, where he's talking about, you know, taking a stake in these AI companies. Elizabeth Warren's talking about taking a, so you got the progressive left talking about taking a stake in AI, and then the right talking about for the government taking a stake in AI. So some version of this is going to come together, okay? Because you've got cohesion for different priorities on both sides of the political spectrum. It's also becoming clear that it's us and China in a winner-take-all national competition, period. There's nobody else in the game. Europe's not even part of it. Oh, by the way, if you want to see something really fun, get on X and look at all the Europeans that have come to America, and they're figuring out how awesome Buc-ee's and Costco is.
Right.
It's really awesome. And they're also discovering that the media has been lying to them about the condition of the United States. Mm-hmm. And they're seeing the wealth disparity that has opened up between the middle class and the upper middle class in Europe and in America. And there was this.
So the beautiful one showed me some YouTube guys. There's some German guys that are running around the country.
Yep.
And they're like blown away by like how friendly people are in America and how cool things are, and they're blowing up. By the way, they got millions and millions of people following them now.
People from all over the world, but particularly the Europeans are the ones that I think have really noticed. And here was the example that I thought was really interesting. There was a British young lady, and she was talking about what a home. She was like, you get a mansion for $400,000 in some suburb in Texas, right? She's like, look at this dump you get in the UK for $400,000.
Right.
And you're talking about, okay, here's the housing stock, but anyway, what this has sort of become, guys, is a winner take all between us and China. There are no other players. Okay, it's just us and them. And so now you're gonna have money flow into the AI ecosystem, which is semis and infrastructure and all these other things, directly from the government. I think this is what keeps this bull market going. And over the weekend on the Direct Access thread, shout out to Tom Eller for getting the debate going on this, or at least the discussion, because he's the one that triggered me. But I love I love doing long-term forecasting stuff, and it's really shoddy. Most people, even I suck at it. Like I think the worst long-term forecast I've made over the last few years is probably interest rates. But we're going to do it here on the stock market. Here is some work that was done by one of my favorite Elliott Wave guys on X. It goes by Mo. He's got some cycle work overlaid on some Elliott Wave work. But basically, the main cycle that he's focused in on is pretty clear here post 2008. And, it puts us peaking sometime at the end of 2027, 2028.
Is he laying some Fibonacci stuff up there?
Oh, completely, man. So we got Fibonacci targets up here, ranging from 8,300 to 9,500, depending on which extension we end up going to, peaking sometime around 2027, 2028. And what I talked about on the DA thread over the weekend was if this technology is real and ultimately reaps the benefits that, the more optimistic case outlines, then I don't think 2028 is the top. I think 2028 we have a correction, and then we continue maybe into 2032, where you then ultimately have a real top, and you have sort of a large long-term sideways correction over a decade or more, where we try to politically argue over how the abundance gets split up, because that argument will come. If AI does not reap the benefits that the bulls and the more optimistic cases outlined, then this bull market probably does peter out around 2027, 2028, and the capex runs out, and you don't get that final thrust up. But either way, I think what this is meant to tell you and meant to communicate is that this bull that we're in right now has further upside. Okay. And that's where you want to be, kind of focused intermediate to longer term, maybe not as so much short term, given the fact that we're in the middle of summer, we've had a huge move up, but intermediate to longer term, there's a good reason to believe this market can run into next year and potentially further. Okay. So the trend was upgraded. The model got upgraded back to 5 of 5. Now, you always have to take note when the model goes from 5 to 5 to 4 of 5, then back to 5 of 5. Okay. So that's a little bit less of a ideal, signal than when you go from 3 to 4 to 5 in that sequence. However, you can see, as we showed you, or at least discussed in the wrap last week, that all the major indexes were back above the 21-day. We're sitting on it right here today. So we got support at the 21-day here. We got support at the 50-day here. And the 200-day is pretty much back at the old highs. So those are your levels of support. You're no longer overbought on the daily, and we're still kind of in this box from about 758 to 720. And guys, we may need to bang around here for a little bit. That would give this huge move up a little time to correct. That'd be okay. Seeing this last week was a great sign. because we'd had this violent sell off here, but it pretty much immediately got sucked back up, and a lot of names, some names went to new highs. So you saw this same pattern across the board, and the Qs I think are probably still above the 21-day, but it's going to look very similar. Yeah, firmly above the 21, but you got the 21-day up here now, the 50 here, which is good. I would find it highly unlikely that the NASDAQ would break 6,900. Okay, given the 50-day and the fact that we had two lows that held here, right? We had that low hole, we had that low hole. So unlikely to me that we break that here. And the Russell continuing to act the best. And you know what? There's a reason for that. Kind of skip around here. The reason why the Russell's been acting so well is you've got the Mag 7 really lagging. So the 493 are crushing the Mag 7, guys. 13.66 year to date versus minus 0.79. And we brought this up a couple times. Mag sitting on the 200-day again today. Really need to see that hold. Or you're going to, if it doesn't, you're going to see these indexes chop around. There's just too much market cap in those names, right? So the Dow looks more like the Russell and has been acting pretty well here again up today. So all in all, guys, you had an upgrade in the technical condition in the trend model last week. We went from 4 back to 5. Okay. Earnings, we're getting towards the end of the season here, guys. Not a lot going on. We got FedEx maybe on Thursday after the close that people will be keying in on. But the real deal will be Micron after the close on Wednesday. That's FedEx Freight on Thursday after the close. FedEx is after the close on Tuesday. So everyone's going to be keying in on this Micron, guys. And there's the reason why. This is from James Thome. I thought this was really well said.
Micron's Wednesday, not tonight?
I think it's Wednesday. Let me look. I think that is confirmed in market, Serge. I looked this morning. I could be wrong. Let's see. Yeah, 2 days. 2 days.
Okay.
Yep. So Micron's migration into the heart of the AI stack doesn't automatically earn it a market multiple. This is the big debate right now, guys. So, but it does fundamentally change the terms of the debate as we wait for earnings. In the 1990s, if you've been around tech for a long time, guys, you know that memory was the most cyclical thing in tech ever. Okay, it was totally dependent on whatever was going on, the IT capex boom at a time. Got amplified by Y2K. You get these overbuilt, underbuilt sort of cycles. It was really treated as a commodity, all right. But today now it's different. You're structurally short compute and memory is intelligence. And Micron's HBM and advanced DRAM franchise are tethered to a concentrated cash-rich customer base whose AI roadmaps are measured in decades, not quarters. So this whole thing is about whether or not Micron's memory business is no longer a cyclical commodity, but a key technology that is going to be high margin, and consistent in a way that it never was before. Okay. So if Micron's earnings turn into contracted high margin infrastructure cash flows with industry supply discipline constraining the traditional boom bust amplitude, then treating Micron as a permanently discounted commodity memory story misprices both risk and reward. And that's what's happened, right? That's exactly what's happened. That's what's driven this huge run up in memory. It's been absolutely spectacular. Up again today. But the price earnings growth, the PEG ratio is like 0.5. Okay. And when you look at the numbers, I mean, it's really staggering. Here's the operating income projections. Okay, here's August 2026, where we're at right now. All right. This is August 27.
I got to interrupt real quick. Anybody on the call who's looking for a trade, STM was on the radar this morning. It was purchased in a short-term account. Trader Z flagged it. And right now, we showed us where it wanted to go today already. 81, call it 81 and a half, right in that range. STM is 79.64 right here. I think you guys can get a point and a half on that stock today. So there's a short-term trade that Trader Z flagged this morning. I'm just watching tick by tick because I'm a maniac and a short-term trader. So,
Dutch, it looks like this is what we're getting right here, buddy, on the short term.
Yeah, this looks really good right here. So
looks like we should get it.
And by the way, when you threw out TE, and by the way, I love both STM and TE because you've got options expiring in 4 days on that. On Friday, you can actually hit the stock. You got plenty of premium, and you can write the covered calls on it on Friday up above the market and get a lot of premium and protect yourself. And if they take it away from you, you've made a nice bit of money. I've done both TE and STM in size. So that's where I'm at. Anyway, sorry to interrupt.
No worries, man. TE is actually the only position in the sector rotation portfolio that's not in the black. And I didn't sell it last week because I'm really bullish this stock. This is a really choppy stock and it's been tough to trade. But $10, this is the most technologically advanced full stack solar panel manufacturer in America. And the plant it just got some big award. So we're keeping it on that list for that reason. I'm bullish. I'm very bullish this stock longer term. It's not going to be an easy trade. You're going to have to rise some volatility, but I like that name for deep fundamental reasons, Dutch.
Okay, I love that. I love that you added that. I love you added that because that gives you some kind of, wind in your sails there. Even if you have, it lets you stay with it.
Yeah, and that, hey, it's in the sector rotation portfolio, and hopefully, if it continues to come our way, if it goes positive, it's one I'm gonna scale into over time. Yeah. But here are these Micron numbers. Hey, the other thing I thought was fascinating, guys. $72 million went into these Micron 1500 calls expiring 12/17/27. I mean, that's a massive bet. Got to be by some hedgy that's running a massive.
Wait, say that again. Where
$72 million went into these Micron 1500 calls expiring 12/17/27. So these are leaps. But
so he's out of the money, $300, and he's got 6 months. Okay,
72 million. I mean,
that's a lot.
That's a lot of no. Hey, he's got more than that, right? He's got it's 27. He's got a year and 6 months.
Oh, okay.
Yeah. Hey guys, this Micron announcement also happened today. Micron and Anthropic announced a strategic agreement. I just thought that was kind of interesting. That was this morning. I didn't have a chance to get into the technical details of it at all, but clearly Micron making moves with key players. So this Micron thing is big because it's going to move this whole universe, right? We got Micron, SanDisk, WC, STX, all the memory equipment like AMAT, LRCX, KLAC, ONTO, the other infrastructure trades, SEMO, which we went long, Avago, Marvel, Rambus. I mean, we're long 3 of those 4 in the sector rotation portfolio. SEMO off to a good start, or it was. Pulling back a little bit today, but pretty high on the 250 list. So I think all these, MRAM is on the long-term list. There's a lot of companies that'll be impacted by this earnings announcement. All right. What are we watching? Well, I've already told you that the 493 are beating the Mag 7. This is from Ryan Dietrich. June, this is one of the seasonably weakest times of the year. Okay. Starting about the 17th of June, running into the end of the. So just know, not that means anything, or that you can apply it. Some of this is a function of like human beings, guys. Volume dries up, people go on vacation. The Wall Street crowd goes to the Hamptons. You get declining volumes as people live their lives in the summer. Not saying it plays out every summer, but there almost always is declining activity. So just take note of where we are, both seasonally and technically, as I described to you in this chart. And so, what would make me a little more bullish is if we broke out of this. What I don't want to see is us, hit this here and then break down and then break that low. I think 690. As long as you stay here, this is just high level consolidation in a bull market. Okay. So we've got all these companies now with $1 trillion market caps. This is from Charlie Billiard. SpaceX is in the mix now. Having a little bit of a tough couple days here. But you can see, guys, this is becoming less of a marker of size than it used to at $1 trillion. Now we're into the 2 trillion, 3 trillion, 4 trillion, 5 trillion. I had once said I thought NVIDIA could maybe be a $10 trillion thing. Now all that's got to happen is the stock's got to double from here. Alphabet maybe has that potential. SpaceX maybe has that potential, right? So $10 trillion now is becoming a realistic thing in the stock market. And I think you're going to see some of these companies reach it before this bull market is over. And look here, as we go through the market leaders list, notice how two of them are memory, Dell's in the infrastructure name. BE been having just a great run. Number 2 position in the sector rotation portfolio had jumped up a little more earlier today, but you can see we've had a great 1, 2, 3, 4, 5, 6, 7 days in a row. Had a great option trade for the direct access guys on BE that came back nicely. Keep your eye on that. Look, that's a company that I think could realistically easily be a $500 billion, maybe $1 trillion company one day. That would be a 5x from here. We got names like ARM, right? 2 more memory names. So look, you had 5, 6 memory names in the leaders. MBIS, one of our large positions, continues to outperform. Pulling back today, but had hit a new high last week. So look, guys, as we tell you constantly, leaders kept leading. Marvel, GLW looks like it's going. Dutch and I were talking about with DA feed this morning. That whole group has been trading sideways. Looks like it's setting up for another move up. One that we put in the wrap was Keys. It showed up in the market surge system near pivot.
Is Q and APH in that same group?
Amphenol, yeah. Hey, not necessarily directly, but yes. So, and hey, I'm glad you brought up APH because that's a good looking chart. Here was the key site. You got the relative strength blue dot, and you got the flat base pattern. So you're at the pivot. That looks like a good entry. Q was the one you asked, and then APH. So Q looking really good. New high today. That falls in with AEHR and ACMR, Dutch, which have been red hot as well.
Right.
Q does. So that sector, ACMR hit a high last week, and ICHR and that testing, and AEHR we had traded as well. That one looks like it could go higher as well. But with Q, that's a newer name. That was an IP. That's a newer IPO. So that one, definitely want to keep an eye on this one, guys. Nice, continuously sort of stair-stepping pattern. APH, Dutch, was a VN stock of the week or day last week because we had this great double bottom. And, man, it's traded up nicely off that. But I think you could go further. It looks like the system target is up near maybe 205. Yeah, 205, 210. So here you can see that flat base on a weekly basis, really clear. Relative strength blue dot there on the weekly as well. Hey, keep your eye on those, Dutch. Those are right sitting still pretty close to the pivot. Noticed, kind of jumping around a little bit, but I had noticed we had a lot of stocks near the pivot, guys, over the weekend, and a lot of them not in tech. Probably a good sign, meaning we're broadening out this rally. So we'd always like to see, more than just tech. Hey, we've got names like VSH that we've been playing that are on the long-term list. I think that one has more upside. Okay. We've got some speculative leaders that I think they're trying to figure out what the next move is, like AXTI, which you can't decide if it wants to get back above its 50-day or not, right? But we are holding here after an incredible move, and we're not having some sort of, nasty sell-off. So we had talked about this stock specifically on the weekly. I love seeing a stock that's going parabolic try to base out real high like that and burn this off without crashing. But some of these speculative leaders, there's AHR. Here's Ping that we're long. I'm going to sell, but we got a nice pop out of this today. I'm selling it on the long-term list, not because I don't like it, just because I got a nice move in it. But, a lot of names in the list here are actually outside of semis. And we're going to add Fuel Cell today to the long-term list. Like how that's acting. We're gonna keep looking for names in some of the smaller groups, guys, to rotate onto the long-term list, on the second rotation list. But here's this timeline we've been outlining, and I think it fits well with this conversation we just had. If we get the abundance trade, if we get the return on investment from this first wave of build out in AI, well, then that translates into the need for more power, and then ultimately the application layer of this cycle. Okay, so you go from, we're building out the data centers, we got to have the memory, you got to connect it all together with the photonics and the networking. You need all the infrastructure players to build all this. We're doing it now, but it's a race. So now it becomes a power bottleneck. That's why we have you in all these contracted neoclouds that have power that's guaranteed. And we've put you in things like some MP and USAR. We're a little early here, guys. That's what I'm saying. So we're a little early here, but we've started moving towards this in the long-term list. Then further along the layer, further on, you're going to get robotics and maybe space legs up again. Right now, space is struggling as a sector. So kind of post a SpaceX IPO hangover. But what the point of all this is, guys, is this sort of evolution of this trade. I keep bringing it up because we're still early. We're like over here, right? So it's still the AMDs that are setting new highs and the Marvels, right? So we haven't even really gotten out of this first phase. And I think optics is just basically basing right now. The GLW is just putting in a sideways base. AXTI is putting in the sideways base. And so you're going to see those come out of that base eventually. I really think, guys, you've got to avoid cold themes. So if something like space gets cold, you got to kind of look towards something that's hot. And right now, space is it's cold. So today we're going to sell Lunar from the long-term list. It's a loser. We're down on it, so we're gonna dial down our space exposure with Lunar, and we're gonna up our exposure to what's working, which is more along the lines of semiconductors and energy. Okay. So I think it's really important that you're constantly looking at all of these thematics and saying, all right, where are they at right now? Names like nuclear, okay, are emerging out of a nasty correction. So an SMR or a UUU, these stocks are off massively, but it looks like the pain could be over, right? So that's where something we might go back to. CCJ and UUU looks really good. UUU signed a multi-year deal with the government last week. Okay, that could be a game changer for them long term. So we're watching that nuclear trade as one that could emerge new. Quantum's the same way. Okay, drones have been in a big correction, so I've got my eye on that to see when that could come back to life. Whereas AI systems has been red hot, so has semi equipment, okay, and so has networking and interconnect. I think we're still early on AI, cloud, and compute. Software is trying to figure out what the hell's going on because you got like Palantir still selling off, Microsoft still selling off, CRM still selling off, Team still selling off, Bounce. But so software is kind of like, that's a thing to avoid still. And we do this outside, except maybe with CrowdStrike and cybersecurity has really become the standout of that space. And we actually shared that with you on this call, if you remember. Datadog, Palo Alto, CrowdStrike. Those are your leaders. And they were all sort of, benefiting from this Mythos story as well. FTNT is probably one of my favorite names in that space. Should already be in the sector rotation portfolio. It's not, but this is one of those companies that I'll show you that this is a great company. 20-year chart. It does nothing but go up, make shareholders money, create value. All right. So winners keep winning. Winning thematics keep winning. Hey, this data center infrastructure looks like VRT. Seeing that make a comeback. Look at that. That stock has just been a beast. And it had a nasty correction. So keep your eye on how we move through these thematics. Because, they come in and out of favor. And I think if you're good at watching when they consolidate, you can go back to them when they sort of reemerge as leaders again, which is what happens. Okay. Because you're going to see a stock like ONDS at some point break out of this multi-week consolidation and eventually make another leg up. But we've been here for a few months now. We may be here for a few more months. So you kind of hang out until it shows itself as a re-emerging leader and re-emerging thematic leader. All right. So leading groups haven't changed that much. Computer, software, hardware, number 1. Semis, number 2. Electronic parts, semi-manufacturing, 3 and 4. Internet network, number 5, jumped up from 13. Keep your eye on that. We've got computer communication services staffing went from 77 to 11. But computer networking, telecom infrastructure, security for the computer software. So a lot of the same names that we've been talking about, guys. And you see this being confirmed in VectorVest. We've got color guard on mute, some green, a little bit of green, a little bit of red. So the color guard's been a mixed bag recently, but you can see most of the leaders up today. Micron, here's the top VST stocks. Fix is always on the list. Taiwan sent me. Here's SanDisk, AMAT. There's COHR. TTMI has been coming up a lot. So pretty good day in VectorVest world. Pretty good day in Market Surge world. Got some big winners. Hey, I had talked about Wi-Fi with a. Okay, yeah, I want to bring this up, Dutch. Dutch, you need to put this one on your radar, buddy. This is a new one, man. This could be an early NBIS. We're hitting a new high today at 43.88. Cloud and co-location services for AI application. Got some great partnerships.
What's the symbol?
Wi-Fi. WYFI. Talked about it on the DA thread this weekend. Popping more than I would have thought today. Credo, we're in. ON, I threw out this morning. I think ON's going higher, guys. We're going to put that one on the long-term list today. So you can see a lot of names on the 250 list up big. Noticing this Sire Therapeutics biotech. Some biotech names starting to pop back up. The IBB looks pretty good, actually. Look at this, Dutch. You've been watching this? Look at this biotech weekly ETF chart.
Yeah, I've been watching it. It's been pumping.
Yep. So maybe something to trade there. We got our eye on that. You know, kind of seeing if there's somewhere the puck may go outside of tech. If we get some rotation.
Well, all I know is that if that heats up anymore, then it's going to start breaking out. And you and I both have experienced what happens when biotech runs.
Look, this was a powerful move, but this has been a pretty long consolidation period.
Right.
And this sector, guys, if you look at the long term, you know, this thing has gone nowhere for a very long time. You can see where we're at. I mean, this is
when it breaks and runs. Look at that. Look at the left side of that chart.
And Dutch,
that's what it does. What's that? I lost you. And he's gone. Hello.
Hi.
Hi.
Hey.
On the left side of that chart, you can see what happens when biotech decides to go. That thing went from $30, $35 to $130, and it did it in a year and a half, 2 years. I mean, that just smoked. And so we might be setting up for another run there. We've consolidated for quite a while here.
Would that be your cup and handle there that's forming that you see?
It's kind of a sloppy one, maybe. Might be a sloppy one. Looks like we lost. Oh, there he is. Is he there?
Can you hear me?
Yep.
All right, now you're back. We were talking. You had that biotech chart up.
Yeah. So hey, long term, this is really promising. But what I'm also noticing, Dutch, is these genomic stocks are heating up.
Okay.
So it's hey, this is one of these sectors.
So give me some symbols. Give me some symbols in genomics for us.
TXG.
TXG, we've done that one.
Yeah, that's the one I've been getting on my radar the most. TXG.
Okay.
Dutch traded that one really well. I mean, we did good on that one, I think.
You've got some potential here, guys. That I'm of the belief, and there's some really smart people saying that AI is going to eventually deliver some really promising breakthroughs in biotechnology. Maybe the market's sensing some drug discovery is going to happen and be advanced. Who knows? I do, and I have shared with you guys that Lilly is building its own proprietary internal AI that's built off its own internal data for drug discovery. So who knows? Maybe that sort of actually becomes a real thing going forward. But when you look at the 250, things look good. When I look at the IBD 50, things look good. You know, Credo up big, OUST up big. We got an option trade on that one going on. Look, lot of
Oh, we lost him again.
Yeah.
He's gone.
We're getting ready to have some nice storms here on the East Coast. I bet you that's kind of interfering with this satellite a little bit, maybe. At least.
Well, it was, yeah, we got no storms here.
But this is perfect there. Yeah.
All right.
We got
now
dad jokes keyed up just in case.
You got me again?
We got you.
All right. Now you're back.
There we go. So, hey guys, when I look here again, look at our list of momentum names. You can see here. When you come in on a day like today, and the point I'm trying to make is pretty simple. When you come in on a day like today and the S&P's down 0.28%, what you've got to focus on is this giant list of stocks that are up massively. Because this is where the opportunity is, even as the indexes languish, right? There's movement underneath the hood. There's stocks that are setting up, and there's stocks to be bought. I really like that ON trade here, so we'll do that here on the sector rotation portfolio. All right, Dutchman, get in here and talk to me about the short-term portfolio.
We went to cash on Friday pretty much. Had one position left at the end of the day, and today we took that cash and we started putting it to work. So just doing a quick check on the real time on this here. So we jumped on some stuff early today, and some of it's kind of consolidated and peeled back. So, but we ended up being up like 20 to 22% at the end of last week. We're up 17.6 now. We're up about 20 grand today, 19,000. But what we ended up buying today was we bought the STM, which we just talked about. We bought BRUN, which has peeled back and hurt us here for short term in the morning. We stuck with, we got DIOD. We bought that today, staying in that sector. We bought BE because it's a beast, and it's that whole energy sector is kind of heating up. We bought SMR also in that alt energy space. We like this alt energy space. It started at TE. We didn't buy TE, but TE's in there. BE, TE, SMR, all these alt energies are looking okay. Even the solar space, ENPH is holding up. So like the alt energy, and then we bought some HUT, which HUT, Cypher, Hive, all those Keel, all of those in that group are looking pretty good. So we're off a bit on HUT and we're off a bit on BRUN right now. But tell me about Boost Run, okay? Because that came out of your research.
Yeah, hey, look, the only thing I would say here is just be careful with size because it's less than $1 billion. But I like what these guys are doing, and the stock has been on fire. You went from 10 to 36. You're probably just going to bang around here at 40 once or twice, right? I don't want this trend line to break. Right. But you got a lot of companies that I'm finding in that sub $1 billion category that are kind of interesting. And this is one. There's not. You got like zero coverage here again because you got $1 billion market cap. But I'm telling you guys, some of these are worth looking into, and they're probably going to find a home on the long-term list, if anywhere. I'm kind of going so with Wi-Fi and Boost Run. I'm going down the market cap spectrum to find, these cloud infrastructure plays. So,
Okay.
so basically, hey, can I find an MBIS or an IRN early stage? Okay.
Right.
And this is one of those names that I'm putting into that category. Okay. You've got their whole, spiel is, hey, we've got proximity to NVIDIA, right? You can see it all over their website. They can do Rubin. You can reserve. So some of this is access to the top NVIDIA compute. And so my evaluation has centered around, okay, who of these small players has access to the NVIDIA compute and can actually get it turned on. And so Wi-Fi and Boost Run have been the two so far that I think potentially could be, long-term ideas that get gravitated over towards the long-term list or maybe even the sector rotation portfolio if they play out the way that I hope. So that's the thinking, man.
That's all I got. Maybe we're gonna buy some of that. We might buy some of that Wi-Fi also in the short term right now. So
okay. All right, hey, guys, over in sector rotation, we had 3 buys. We bought SEMO, FPS, and ASML. FPS has been just a great stock. This is electro distribution equipment, powertrain. I think what I like about this is a newer issue and hopefully has some legs and chance to run, whereas a lot of the names in that space have been out and have kind of already read up pretty dramatically. We've got SEMO that's in the semi space, and then ASML, which of course everyone knows. The rumor was that the Chinese had stolen or smuggled in a ASML machine into China last week, which I thought was pretty impressive considering they're like the size of 2 or 3 school buses, I think. So kudos to whoever did, probably one of the great technological thefts of the 21st century, if it's true.
That's pretty
crazy stuff.
Big accomplishment.
Yeah. So added those. Trying to get some higher market cap exposure back on the sector rotation. I feel like I'm not exposed well to that large cap semi trend. AMAT, ASML, Taiwan Semi. I hate that I sold those names, but perfection is unattainable. Here's the sector rotation list. We got MBIS, BE, IRM, Marvel, APLD, top positions. Rocket Lab's going to need to start performing or it's going to get cut. TE kind of coming on here, so hopefully that'll be in the black. And then what you're going to see is me eventually have to reduce the number of positions that we have. I'm hoping some new winners will start to emerge so I can scale into them. So that's the thinking. Hopefully that'll play out. Over on the long-term list, we're going to sell Credo. Got a nice pop. Quick gains there. We're going to sell Ping, got a nice gain there. And then we're going to sell Lunar, got lost there. We're going to buy Fuel Cell, ON, and Form. Okay. I need to update the performance spreadsheet for the long-term list, so I'll have that done. Maybe not for the next call, but for the last call of the month, we'll do it. But don't really have any problem children outside of Lunar and BKSY. Yeah, got a few names, just kind of give some breathing room on a long-term list. We don't stop out as quickly there, but still performing pretty well and pleased with how sector rotation portfolio has bounced back after the sell-off in tech. So, Godfather, I think that wraps up. Let's go to Q&A, my friend.
Yeah, let's start off with Russell B. It says, you think there's a lot on the vine left for Keel, Keel?
Sure is acting well today. If my beliefs about where we're at with these names is right, yeah, I think all these names have a lot more you know, Kill kind of coming out of this $6, $7, $8 range. If you could get to 10, you could maybe go into price discovery mode. This name has been, one of these Bitcoin conversion stories that has acted really well with like Cypher. Very similar charts. I think it has more to go.
Just for the hell of it, Hive's in that group. And so Hive just went from 4 to 5 today. And for the hell of it, on Friday, I said, if he's right about this group, these could be doubles or whatever. So I bought some 7 calls and some 10 calls for January 2027. They've already doubled today. So I'm just saying, I didn't buy a lot. You don't want to go crazy, right? But because that's having a stock go from 6 or 5 to 10 in 6 months. But these are the ones that can do it. And if Trader Z is right about this space, then they'll do it. My opinion.
Yep. So, good question, Russell. I think there's more.
All right. That group. Yeah. All right, let's see. Bill S looks like he's trying to get the grandkids set up, so I guess I need to do a lineage test. Wants to know what you think about UMAC for the drone parts, and then he also asks,
how old are the grandkids? Maybe they should go to Bacara and learn something. I have a summer class for the kids out there.
That's true. And the other one was if there was any of a lower cost alternative for those the kids accounts for MU. So 2 completely different things, but both for the kids. It's for the kids.
So what you ought to do is if you're trying to buy small dollar amount stocks, open up an account where you can buy dollar increments instead of full shares. So if you want to drop $100 into Micron, you can just
Robinhood be the perfect. Yeah, Robinhood would be the perfect one for that.
There's all kinds of apps out there that let you buy dollar amounts of stocks. That'd be my advice there, as opposed to trying to seek out a lower cost or lower price or alternative. Now, your question about Unusual Machines, interesting little company. I don't know if you've ever been to the website. Not a big company. Stock jumped pretty dramatically. Has gotten some attention. It's on my tracking list in space. I don't know if I'd be a buyer yet, because I think this whole space is still kind of like, here's AVAV and here's KTOS, ONDS. They're all just a little weak right now. So my answer would be, this is a theme that is not hot right now. And if you go back to what we just talked about, I would probably avoid thematics that aren't hot. My guess is what this thing is going to do is maybe something like that for a while. And what you want it to do, if you're already long, is just stay up here above that, so that maybe it legs up. I think it's yet to be determined how durable any of these drone franchises are. ONDS probably has like the most platform-like thing, but I'm not. Yeah, right now this is not a hot thematic, so I'd probably tell you to look elsewhere. And then the second question is go open
the MU. Yeah. So I guess I can take off of that you still like MU and it could be going higher.
I mean, look, guys.
that's what I took from it.
I'm still long. I gotta tell you, I have really looked at both this and SanDisk and kicked myself in the ass for not like exploiting this trend. Guys, I mean, the stocks are just, I have tried to analyze this from a stock being overbought perspective, and it's kept me out of it, and then look, you had a chance to get back in
Z, right there. I just want to switch. So explain to me, which might help somebody. You have an well overbought before it's new highs, but it's now at a new high, but it's less overbought.
Yeah, so it happens all the time, guys. You can burn off an overbought condition and go to a new high. That's what you want it to do.
Right.
Right. So yeah, I think Micron, and this is a trend that you just have to go and ride until it breaks. Because I've tried to predict it. Because if you guys remember, I was long Micron. I sold it. I was like, it can't keep going higher. I bet I sold it down here.
Yeah.
I bet I sold Micron in the sector rotation portfolio somewhere down here and cost you guys a lot of money. Because I thought it was overbought, which I never think. And so it's one of those things where it's like, wow, you can't, the one time you don't want to apply that thinking, you didn't. So yeah, I think you just had to let it go. I don't want to buy it here.
Mm-hmm.
I'd probably wait for a nasty pullback. And look, I can't stand buying stocks that have run up into earnings. It's just like, whoa.
Because they're already pricing in, right? There's nothing.
There's already, it just, I don't, yeah. You've already priced in some of the euphoria. So this would be one that would be like, if you're in it, ride it. If you're not, wait for a correction.
Mm-hmm. Oh, let's see. What do you think, John Pieces? What do you think of ABITS, AIBZ?
AIBZ.
Yep.
Never heard of it.
All these tickers are starting to sound the same.
Got to be a small little thing though. Bit Zero Holdings. Ah, yeah. Okay, this is Bit Zero. Look, this crypto thing can't get off its ass just yet. So
it's a miner turned data center. So I guess they've turned into a data center.
Yeah, they're trying to do the same playbook that everybody else is. Yeah, man. I mean, look, I would go with one of the other names that are probably more established at this point.
I think somebody asked about HUT, which is Thomas TW asked about HUT. Same thing, right?
Yeah, great. But HUT would be one where you're talking about a $13 billion market cap. The conversion is going really well. The market's responded very well to the stock. This stock has actually done really well. Right? So I don't know enough about Bit Zero fundamentally to tell you yes. Let's see what don't know if there's any coverage.
We're making money on that Wi-Fi already, buddy. That thing's pumping.
Sweet.
TE and Wi-Fi.
Yeah, don't know enough about this one, guys. I'd have to do some more research. Chart looks pretty good.
Let's see.
Hey, always go to the company website when you can't find anything.
I can't tell you guys how important it is to go with the stuff that's got liquidity too. Like, I mean, Keel doesn't have as much. Well, it has more liquidity now, but it didn't earlier on. But I mean, Hive's got a lot of liquidity. Cypher's got liquidity. Got to watch that liquidity, man, because if you build a big position in one of these things, you got to get out at some point. And when you get out, sometimes it's really hard to get out with a profit if you've got a big block. Okay. I mean, some of you guys are trading small amounts and it doesn't matter, 100 shares, 50 shares, whatever. But if you're blocking 10, 20, 30, 50,000 shares, which a lot of us are, you gotta focus on that liquidity.
Yeah. And guys, I would tell you anything sub $2 billion market cap is swimming in
dangerous.
Yeah.
But Dutch, you brought up one last week. I forgot what we were in it, but people were market ordering it and it was killing us. Like the market was, the spread was dollars. I mean, like it was massive.
Yeah.
Big.
Yeah.
Keel also got added to the indexes today. TE wanted me to remind us.
Oh, that should help. Yeah, good.
Hey, some of the reason, guys, I use the long-term list to put these micro caps and these speculative small caps on it is so hopefully you guys all don't like hit them at once. And if you do, the price differential between where we're trying to buy and sell is enough to give people who get a crappy execution a chance to make money as well. So that way it's less of a execution game and more of, no, if you're going to find some small little stock you want to play, well, you better try to play it for 20 points versus trying to play it for 25 cents.
You know me, I'm not a big fan of, $700 stocks and stuff. Okay. But I've come around over the years to understanding that there's a reason why some of these things are 300 or 500 or 700 because they're higher quality stocks. Okay. And they're institutional supported, because that's who can really buy them. And looking for the $5 stock all the time is, sometimes the $5 stock becomes $125 stock and then it becomes more institutionally followed. But I guess what I'm leading to here is, we haven't talked about it a lot, but this is a stock that you introduced me to probably 3 years ago, Argan, AGX. Is it ever going to go down again? Ever.
It's been in the right space the whole time. Look at this, man.
This is the biggest beast I think I've watched in a long time.
There you go. Hey, heavy construction player. They just keep delivering quarter after quarter. I think we traded it on the long-term list. I know we did at some point. Let's see. Where are we at?
I think you brought it up to me in 2023 at like $40.
Maybe I didn't. Anyway, but Dutch, that name is a good example of a sloppy stock, though. Look, this was at 779. You got down to 576, and then they V you up to a new high. And you did it. They did it to you a couple of times. Look at it here. They did it to you here. So this is a $10 billion thing. You can get these massive moves. But that's been a beast, man, for sure. Godfather, what else you got?
Yeah, let's see. So, Greg W., what's up with VELO and VECO?
So I don't think anything. Just kind of knocking on the door here on 30 with Velo. And VECO, I would say right? So remember, guys, you got to, when a stock moves up, it consolidates, and then it moves up, and then it consolidates, and then it moves up, and then it consolidates, right? Up, consolidate. So I think that's all you're doing here in that whole space.
Let's see. So I figured it was going to come up, but this people asked, why did we sell SpaceX where we sold it? And of course, look at it now. So, and they want to know when the bleeding is going to stop. Well, for carnivore, it stopped. It hurt. It stopped last week. So, and that's took me a while to learn that.
Don't forget though, we made a nice trade on that and made a bunch of money on the first trade.
Yeah, oh yeah, well, yeah, but that was the hardest lesson for me to learn. And you're like, guys, I'm looking at my charts. I'm gonna make money today. Money's money. The stocks are just, and you cut it. And we had a killer day. It was a great day, and you just pivoted. It's like when you meet at the tables, you'll get up from one table and go to the other. It's the same theory, but it's just a different aura, and it works. So I don't know, but that was the question: is when will this bleeding stop?
Great question. I don't think anybody's. Look, I don't think anybody is. this is why this IPO stuff is tough, guys. All right, here was our run up. Here's our correction. You're going to want to see it hold.
Yes.
Probably right in here.
Yeah.
Right. I don't think the space trade right now in general is doing very well. So you're seeing just kind of this hangover where all the mo's coming out of it a little bit. But that looks a little long in the tooth. I mean, my thinking would be if you're in this thing, I don't know. I mean, this is one where I have strong opinions long term, but I don't have strong opinions short term. What do you think?
Going back to Argan, we'll address this in a second. Argan, back to AGX. I just pulled up. It was May of 2025. We accumulated a 3,400 share position at an average cost of $180, buddy.
There you go.
Okay, that $600,000 cost basis is now 2.5 million. So that's that AGX that you found for us. But back to SpaceX, all I can tell you is, look, when I left it, it was starting to get hinky and showing a lot of weakness in the sell-off. There's a lot of bullshit narrative going on out there. There are a lot of people who hate Elon and are bashing this thing, okay? Let them do it. Let them wash it out. This is going to be one of the most insanely awesome companies on the planet, but that doesn't mean the stock's going to go up today. So sometimes you don't have to know. You just have to step the fuck away and let it do whatever it's going to do. And I don't know what this is going to do. We don't know. Nobody knows.
Yeah.
Okay. Anybody who tells you they know what this thing's going to do, when's the bleeding going to stop? Don't ask crazy questions, man. For Christ's sake, it's not going to, who knows? All right. It's a wacky, newly traded stock. Let it do what it's going to do, but step the hell away while it's doing this. That's what we did. We finally just said, you know what? We made a big lick. We took a hit. So we did 2 trades there, I think. And I just said, you know what? We got to step away from this thing. Sometimes that's all you can do, man.
Well, you said also too, you only have you told me this when I was with you at one time. There's only so much room in between your ears that you can even save for the brain matter for it. Like if you're thinking about it and it's not making you you just gotta let it go. It could be fine later. Yeah. You may be happy with this later. You may sing its praises, but you don't care about it as SpaceX, and it's out of your brain.
Well, Trader Z always tells me whenever I can't, he knows. Okay, we've been trading together for a long time, and whenever I can't sleep over something and I pick up the phone and call him, he knows it's just size, man.
It's right.
That's all it is.
Yeah.
If I had 100 shares, I wouldn't give a shit. If I got 2,000 shares, I'm starting to worry about it. Well, why? Size. That's all. So cut your size. Cut your size so you can sleep.
Because I'm sure you still have your original IPO shares, right? Because I know some of us got a couple. I mean, why get rid of those? Just keep them and screw it.
Well, I think some of that, Godfather, is if you're in this in a small position,
right?
You just hold it.
Right. That's what you guys just said.
If you went crazy and went real large, and now you're in an oversized position, well, I think at some point, like at all points, you got to draw some sort of line in the sand and say, I'm going to reduce it if I can't handle the loss. Now, the flip side too is you could also just say, you know what, I'm a SpaceX investor now. All right.
Right, that's it.
And that's okay too. But if you went into it short term and you're sitting in it here with a loss, and the loss is, not painful, then just let it ride. If it's so painful that you're like watching every tick, you've probably sized it up too much and you probably should just reduce your exposure. And that's probably a rule of thumb in general. Right?
Yes.
Yeah.
All right. Yeah,
question.
okay, a couple more. Yeah. So that's it. That one. Let's see. Do you want to tell Thomas W? I'm going to give him a call, but he wants to know if when we're going to start explaining a little bit more what 33 is, or if we're just going to keep it under wraps until Bacara.
Till Bacara, you're not going to get anything, man.
Just Thomas, I'll call you. I won't tell you any more. So to caveat that, I'm not going to divulge any, but I will tell you. I will convince you to be there to hear what Z says.
So we're going to have our own proprietary list of 100 stocks that will then in turn be ranked again to have a top 33 out of that 100. We're going to use AI to select the 100 stocks, and it will be thematically organized. And over time, other features will be built into it that may be more timing related as well.
And when you're saying AI, you're talking about this is AI. This is stuff.
Yeah.
You're not just going on the cloud. I mean, this is your.
So we're building our own ranking system that'll update weekly, and it's pulling stuff from a lot of varied sources that we'll share with you at the Bacara.
Yeah. Cool. Let's see. I've got a couple more. Let's see. Patsy, I started on this one. You talked about healthcare. Oscar was one you've talked about. We've done it near all-time highs.
Yeah, it broke out last week of this big range it's been in for a while. This is a sloppy stock. There's that 5-year chart, and there's that giant box you just kind of broke out of. A lot of people in the field don't like this company. I don't really have a strong feeling about one way or the other. I've always thought they were going to be an innovative maybe player. If you zoom out, you're kind of getting into the IPO world of pricing, so maybe you could kind of break into price discovery. Clearly a leader in the space. IBD favorite. It's not in a leading sector yet. That'd be my only criticism. This would probably be one I would have to trade on the long-term list versus the sector rotation portfolio unless the sector started performing a lot better. So good question, good stock. I totally see what you see. Probably, let's see where it scores here. 93 earnings in 46 days. Composite rating is 83, and that's because you've got a group relative strength of a 58. So the group is the problem. Good question.
Yeah. Bradley asked that TEX is in a strong sector. Looks like it's setting up. RS is rising. Shouldn't CAT give the stocks in the sector more juice?
What was the first letter of that ticker?
TEX, TEX, Tango X-ray, Tango Echo X-ray.
Good chart pattern. A little weak on the relative strength, Bradley. Probably will break out 77. You might run up here to targets like 85. Caterpillar's in that same space. That chart's been that's been a better place to be. Look at that, boomer. Man, Caterpillar, what a great beneficiary of AI because of their generator business. Yeah, I mean, Bradley, I see it. It's not a bad looking chart. Relative strength's a little weak. Comp score's not bad, 92. Long-term chart's not terrible. I mean, yeah, it looks like it wants to go. Here again, the only thing you would want to do see is I think it run a little bit more. Maybe it plays catch up. Sectors in the top 13. Yeah, not a bad find. Only criticism is, maybe a little bit weak on the strength front.
I want to interject here. Okay, just do a quick check. There's a lot of people still out there with SEO and playing the oil short and all that stuff. Roger, how you feeling about things? Great timing on your short a couple weeks ago, and so just where do you think? I was watching I looked at the chart the other day, and I noticed how high up it went, and then how far down it's already come. And so, what are we hanging at? WTI's hanging 75 area, something like that. So
73, 72. I don't know if that's the current month, but yeah.
What are your thoughts now?
Yeah, I think we bounce around here, probably from a $10 range,
Okay.
US oil, 70 to 80. Again, it's going to be all headline driven. I think things are going very well, it seems like, in terms of going from the memorandum of understanding into trying to implement, a ceasefire. So I think it's going well, but I think, again, we're dealing with Iran. We're dealing with a regime that hates us, that hates everybody. And they're not going to let go of their power. They're going to do something stupid. And I think
I love it.
The price is going to rise. I'm completely out now just because I think it is going to, I think we have a floor set already in SC.
Right.
And so I think it's, or in US oil. So I think it stays here for a while. I am watching it. I am watching the news. But yeah.
It's funny. It's funny you say that you think there's a floor set, because just today I was thinking to myself, you know what? That little mountain chart that we saw take place, here we are. And I thought, you know what? We're on this moving average line, right? And then I thought, at this price, I don't think anybody's really, it's like, I kind of feel like if I was in the government or I was the president, or I'd say, we're okay here. It's all right.
We're good.
That's exactly right. Yeah.
So,
I don't need to go crazy trying to bring it down to 65 or 55. It's kind of like everyone's kind of groovy here. It's all right.
So, guys, here we are. We're at the 200-day. Okay, you're almost oversold on the RSI.
Mhm.
You're also at almost the point of the breakout, which was really around $68 a barrel. So we're at 73, you're at 68. So you've almost wiped out the bulk of the spike. Now, if you take this back, the point that we've made on the call repetitively is, $73 a barrel oil is pretty normal.
Yeah.
Right. Right.
Okay. So
Not unusual. If you're playing the short side of this still, you guys, keep in mind, this could back up on you, like Roger said, to 80 real quick, and on any weird noise that's going on out there. So maybe you don't have a lot of juice left, is the point on the short term. Now, just so you know, the narrative you're going to hear out there about this whole Middle East thing, and I wrote about it in the pre-market, is there's a lot of people that want there to be disruption and want there to be war and want all kinds of insanity to take place. And so they're running that narrative really hard out there, and they're sending it out through the media, that Iran's got all this power and that Iran's going to shut the Hormuz again and all this stuff. First of all, it's all BS. They've got no quan at all. These guys have got no power left, okay? But the narrative is going to keep it going. And like Roger says, it's going to be headline driven. And that's unfortunate, because the truth is much different, I think. And Roger agrees. The truth is things are calming down. Things are normalizing. And I think if you watch JD Vance right now, and you listen to him, he's not a liar. He's not going to come out there and just flat out lie to us, okay? And I know everybody's, all politicians lie. JD's a little different, okay? He's not going to lie to us, and he's in charge of making something decent happen here, okay, and calming this stuff down. And I think if you listen to him carefully, you'll see, you'll get the cues of which way it's really going. Because if he all of a sudden says, I can't talk to these guys, I'm getting on my plane, get the fuck out of here, then it's then we got problems, okay? But he's not doing that, okay? He's staying at it. So anyway, that's all I got.
Guys, I would say that the probability of a deal being done is very high given where oil and storage is right now. The other thing I would say is there's no resolution to this that pleases all parties involved. And what you've seen now is a clear statement by the White House that there's not going to be boots on the ground. Okay. They're not escalating this to boots on the ground or an attempt to change the regime through physical presence on the ground. That's what's been decided. Obviously, some people don't like that. It doesn't appear that the Israelis are all that fond of the direction that we're going, but that's being communicated also that doesn't necessarily matter as much anymore. And that's a pretty clear, distinct line in the sand. So de-escalation, and quite frankly, guys, you can try to figure out all this stuff out by reading the news, which is really hard. Or you can just look at the price of oil. And oil is telling the real story. Okay?
That's right.
Because the talking heads on TV will say one thing, but the markets are millions of people buying and selling, and it knows more. Okay? And so what the market is telling you is that everything is okay. And so that's the the context that we're operating in. Look, you can even look at like the price of gold and say, okay, that's coming down as well. So there's no real geopolitical premium in oil outside of maybe a few bucks. There's no real geopolitical premium in gold right now. It's indicating some sort of big fear moment. Stocks are at high prices. VIX are low. Rates are stable. The dollar's stable. So I think a lot of the macro stuff is just noise still.
Well, thanks for taking the time to cover that with us, Roger. Thank you.
Yeah, thanks, Roger. Well, so my question is, so oil's come all the way down, but why hasn't SCO gone up more? So it doesn't look like it's going to get back to where it was, right?
Well, these tracking vehicles are imperfect.
That is the one simple statement that needed to be made.
The tracking, there's a cost of roll. There's a cost of leverage. There's slippage in the roll. Okay. So you got to understand that these things are using derivatives to gain this exposure. There's cost. Those futures have to be rolled, right? There's slippage in that rolling process. This is why, guys, this is why these things, they go down. They're geared like, look at the short natural gas. What is that one called? The natural gas ETF, UNG.
UNG or Boyle.
Look, it just goes down.
Yeah.
It's because there's expenses involved in running this, trying to get this exposure.
It's a short-term vehicle. That's the point.
That's the point, buddy.
Yep.
That's the point.
You don't buy us, you don't hold it forever. We held it too long when we were initially going into it. It really is meant to be more of a 1 day, 1 week type of a trade, really 1 or 2 weeks, maybe max. I don't know.
The more leverage there is, the bigger the tracking error too, because remember it resets daily often. So it's not giving you a perfect tracking number. It's giving you 3x return of what it does that day. That return sequence does not equal a 3x levered or a 2x levered ETF. That's a very common mistake a lot of people make. They think that because something is 2x that it's like no. There's all these tracking errors in that leverage. Okay. So just these inverse ETFs, these ETFs that are tracking commodities, they're all trading vehicles that should be used short term.
Now look at Boyle long term.
Same exact phenomenon. Where the cost of exposure just eats up your.
And look at those price changes. It's nuts.
So, this is one of those things where like, hey, don't say I'm going to go long natural gas in my IRA and I'm going to buy oil to get exposure to natural gas. Like, don't do that.
Don't do it.
Don't do it.
Don't. Spoken like a true father.
You're better off buying SpaceX at $225 and hold it. Like, seriously.
Right.
Because at least then you're getting something like there's a growth in the shares of a business that's growing.
That's an investment, not a trading vehicle.
That's right.
that's guys. That's really good. So I'm just gonna let you know
that was a good learning question, quite frankly.
No, it really was. Seems like it should be a video. So I only have 2 left. If you want to,
Let's do it. Let's finish.
Bros and Per. Sabate was Per and Steve was Bros.
Dutch Bros is look. I don't know what I think about this thing. Looks like a big base.